Now, in my businesses, I never spend money. I never spend money. I only invest it.
Welcome to the Maximize Business Value podcast. This podcast is brought to you by Mastery Partners, where our mission is to equip business owners to maximize business value so they can transition their business on their terms. Our mission was born from the lessons we've learned from over 100 business transactions, which fuels our desire to share our experiences and wisdom so you can succeed. Now here's your host, CEO of Mastery Partners, Tom Bronson.
Hi, this is Tom Bronson. Welcome back to Maximize Business Value, a podcast for business owners who are passionate about building long-term sustainable value in your business. You know, I say welcome back, but perhaps this is your first time. If so, welcome to the show. I say it every week. Every business on the planet will eventually transition. It just is a fact of life. We have expiration dates. That's just the way it is. Wouldn't it be better if you transitioned your business by design rather than default? You know, default can happen in so many different ways. One of the 5Ds, death, divorce, disability, illness, things like that. But wouldn't you rather make a plan for how you want to transition your business and do it your way? If you're a business owner who wants to maximize the value of your business and eventually transition it on your terms, you found the right podcast to help you do that. This episode is part of our series from my latest book, Maximize Business Value Playbook, 65 specific things you can do to increase the value of your business. Think of this as the Audible version of my book. Today, we're on chapter 14, properly recognize, accrue, and relieve assets and liabilities. Now, in my businesses, I never spend money. I never spend money. I only invest it. I can articulate the ROI on every dollar invested, whether in our people, in our systems, in our holiday parties. As you already know, I would not even buy toilet paper if I couldn't articulate its ROI. The good news is I can articulate the ROI of having toilet paper. It's wildly efficient to send people back home or to Whataburger to go to the bathroom. So, okay, that's an extreme example, but some investments belong on the balance sheet versus the income statement. For example, a business properly accounts for investments. It must also properly recognize, accrue, and relieve assets and liabilities. Now, for a business with the right person heading up finance, this is a simple matter of proper classification. When in doubt, ask a certified public accountant. Although there is no rule regarding asset classification, the IRS recommends using a threshold of either $2,500 or $5,000 to determine if the purchase qualifies as an asset to be depreciated or if it's going to be something that you can expense. Anything below the selected threshold, you get to decide what that threshold is. Anything below the selected threshold should be listed as an expense on the income statement. And again, the assets go on the balance sheet, expenses go on the income statement. Anything above should be added to the balance sheet and properly depreciated over the correct schedule. Now, why is this important when thinking about the value of your business? In a typical transition, earnings impact value more than anything else. By expensing capital purchases, the earnings are being reduced. If a business depreciates the asset, the impact on earnings is only based on the depreciation, which, by the way, is an add back in order to come up with the EBITDA, the earnings. So for an example, if a business makes a $5,000 capital purchase and it's expensed, earnings are reduced by $5,000 at the time of the purchase. If, however, the asset has a 5-year depreciation schedule, earnings are reduced by $1,000 a year for 5 years. So it's important to properly track and classify these investments for valuation purposes. Now, if the business takes advantage of tax laws that allow accelerated depreciation to reduce the tax burden, it's important to note that approach when calculating the value of the business. And don't forget, the depreciation is a non-cash event. When you make the purchase, that's a cash event. You're using cash to make the purchase. But depreciation then is an add back. So that asset that you purchased never actually lands on reducing your expenses. It will on the financial statement, but when you go back and recalculate your EBITDA, which is the earnings that's important in the business transition, you'll get credit for that. And so it'll never hit. That's why it's important to start thinking about those things. This week, we recommend the following 3 actions to maximize business value. These are our recommended actions. Make sure the accounting is properly, your accounting department, that is properly accruing and depreciating all of your assets. Consult a CPA to determine the proper classification of those assets. And if you're really bored and can't sleep, search the official IRS website for articles on asset classification. I have to tell you, it'll cure the worst insomnia. Next week, we're going to talk about something that's fun: excess cash. What is excess cash and what should we do with it? On the Maximize Business Value podcast. This is where we give practical advice to business owners on how to build long-term sustainable value in your business. As I said at the beginning, if this is your first time, we're glad you're here. Lots and lots, over 170 episodes just packed with great information about maximizing the value of your business. Go download them wherever you found this podcast. And be sure to check out our books on Amazon. Just look up my name, Tom Bronson. So until next time, I'm Tom Bronson, reminding you to pick one thing, just one thing, to dramatically improve the value of your business today. And do it while you maximize business value.
Thank you for tuning into the Maximize Business Value podcast with Tom Bronson. This podcast is brought to you by Mastery Partners, where our mission is to equip business owners to maximize business value so they can transition on their terms. Learn more on how to build long-term sustainable business value and get free value-building tools by visiting our website, www.masterypartners.com. That's master with a Y, masterypartners.com. Check it out.
That was perfect. I wouldn't make any changes on that.